You've actually run the numbers on these services.
Yep.
How much is Apple making?
$50 a year per unique user.
Okay.
It will be higher in America because we have 100 million people, but they're the wealthiest people on Earth.
So 50 billion a year.
It's $46 billion a year over 950 million unique users, so it's about $50 a year.
$46 billion additional dollars a year, largely off of things that, with the exception of maybe music, didn't even exist 3 years ago.
Right. And the pushback I'm going to give you on TV is they're saying they're going to give it away for free if you buy any Apple device. So it's really not going to cost anyone $5 if you own an Apple iPhone.
Well, but if the Apple TV you bought, then you're going to year 2. I assume they will start charging.
Start charging you the $5.
So the point I was trying to make, obviously, with these numbers was that Apple has kind of quietly built a heck of a subscription licensing revenue business.
Yep. And I think I searched on Apple this morning walking in here, and every Verizon, Sprint, they're all saying $40 a month, $50 a month, $30 a month. And if you look at all of those services, essentially people are financing their iPhone at 0% APR, which means actually 75% of people are on a subscription to buy the device, which means 80% of Apple's total revenue is really subscription from the consumer's point of view.
So it's just a cash flow king now. I mean, Apple already had a ton of cash. Now they're just going to be generating on a monthly basis. Markets should like that.
And the trade-in is a really big thing. Like, you can get $500 if you actually turn in your phone you bought last year, and $400 if you turn in your phone the year before. So they're fast passing you into the on-ramp into the ecosystem. Once they get there, they get you there. They lock you in with all these services. And a lot of these incremental services are 70, 80% margin businesses. You don't leave the ecosystem.
Okay, let's switch gears, because the thing I love about you, there's so much to love about you.
Of course.
Genius,
You
and
too.
successful.
Yeah.
Is that you're a tech analyst, but you're based in LA. You're not in Silicon Valley. You're not in New York. And the reason I mention that is, look at all these streamers. Technology is now a video product. LA, obviously, Hollywood, the capital of video. We launched our own product, or at least announced it, called Peacock. Charlie Ergen, a well-known executive in this space, called streaming a, quote, bloodbath, his term, not ours. What do you make of that? How is this going to is there room for everybody?
No, definitely not room for everybody. I love Charlie's word, so I'll use it, bloodbath. One of the things you're going to see is the most wealthy Americans get the most stuff for free. So Peacock is going to be free to everybody, but Apple's going to give you a free service for a year if you have an Apple device. We have Amazon Prime, which are, again, the wealthiest Americans. You're going to get free TV service from them. And Disney has now said $3 if you commit for 3 years, which means anyone with under a 10-year-old is going to pay $3 a year.
So for the big companies that have already the other businesses to support through Apple, right? They can subsidize. They could probably give everything away for free all the time,
for sure,
and never drain their cash. Are they going to ultimately be the winners because they can just consistently underprice everybody else?
Yes, and if you're Netflix at a $13 price point, you must have a $6 service. You can't just be at $13 if lots of these other services are de facto free.
It's also, by the way, if you're Netflix, largely your only source of revenue is the subscription. You don't have an iPhone business to support your subsidies on the TV side.
Yes, or if you're Disney in a theme park, you can also give away that service for free to your customers. So, yeah, you're exactly right. You absolutely need another service, a sister subsidiary, to subsidize your losses.
So if you're Netflix then, and you're spending all this money on producers and shows, you need more money, but yet you might also have to cut your subscription costs?
Or you take advertising, which Reed Hastings has said he'll never do, but I really think you need an ad-driven service at a $6 price point. CBS All Access, $6 price point, $10 ad-free price point. It's about half and half the subscribers that take those two services.
Okay, so Netflix could be in trouble here is the bottom line.
Could be, might be, and also HBO Max.
Okay, HBO Max, what, just too expensive?
Just too expensive. HBO is great, but a $15 price point is a pretty high price point if a lot of your services are free.
In 5 years, how does it look?
I think HBO has to lower its price, which is a big problem for it, given its contracts with Comcast. So it has to be lower, and I think Netflix has to get bought and has to introduce a tiered service in America.